Welcome to the Deep Dive. We're the show that cuts through all that noise to bring you the essential insights you need. Today, we're tackling a big one, a name constantly in the tech headlines, Advanced Micro Devices, or, AMD. We've sifted through a pretty comprehensive stock analysis document, really trying to pull out the key nuggets for you. Our mission today really is to figure out, can AMD genuinely challenge NVIDIA, especially in AI, and can it justify that sky-high valuation, given some pretty significant geopolitical stuff going on?
Yeah, it's a really timely deep dive. AMD isn't just, a player in semiconductors. They're right at the heart of this whole AI revolution.
Yeah.
The buzz around their performance, their future, especially in AI and data centers. It's just immense right now. Feels like a make or break moment almost.
Okay, let's unpack that. Let's jump right into the immediate picture. As we're talking, AMD's last close was $171.02, and it's trading now around, what, $180.95? Actually dipped a bit recently, like $3.47, about 1.88%, just to set the scene. And for context, that 52-week range,
Wow.
lows down at $76.48, highs touching $182.05. So it's been on a huge run, almost parabolic, tells you something about investor excitement.
Definitely. And what's really fascinating here, something you really need to grasp if you're looking at the stock, is the difference between some key valuation points from our analysis. See, our internal price target sits at $187.89. But the fair value, which is more about its intrinsic worth based on fundamentals, is estimated quite a bit lower, like $143.07.
Wow, that's a pretty big gap. What does that really tell us?
Well, it tells you the market is pricing this stock way higher than what some fundamental analysis suggests it's intrinsically worth right now. For you listening, it kind of implies that a lot of that future growth story, all that AI potential, might already be baked into the price you're paying today. You're betting heavily on a very, very ambitious future, not just today's earnings.
That definitely raises questions about expectations, yeah. And speaking of valuation, let's touch on those key ratios. The price to earnings, the PE ratio, trailing 12 months. It's at a striking 97.99. The forward PE, looking ahead, is 43.7. And price to sales, PS, is at 9.38.
Right, and these numbers are crucial. A PE of nearly 98, that screams growth stock.
Yeah.
Many mature tech firms might be in the 20s, maybe 30s, so investors are paying almost $100 for every dollar of AMD's current earnings. That signals massive growth expectations.
Huge expectations.
Exactly. And the forward PE of 43.7, while lower, still suggests analysts expect earnings to basically double in the next year. That's aggressive in any industry. And the PS ratio, 9.38, shows sales are also highly valued. Again, points to strong growth hopes. So the big question for an investor is, are these expectations really sustainable? Are they justified by the actual business, or is there a risk the company can't quite live up to it?
That's the million-dollar question, isn't it?
Yeah.
So what is the business generating all this buzz in these, aggressive numbers? Advanced Micro Devices, Inc., founded way back 1969, based in Santa Clara, California, a global semiconductor player. They've been around the block.
They really have. And they operate primarily in two main segments now. First, there's computing and graphics. That's where you find things like their Ryzen and Athlon processors for PCs and laptops. And also their GPUs, Radeon for gaming, FirePro for professionals, and the really critical one now, the Instinct series for AI and data centers.
Okay.
Then the second segment is enterprise, embedded, and semi-custom. This includes their server chips, especially the EPYC line, which has been doing really well in data centers, and also, importantly, their semi-custom chips, the SoCs, that power things like game consoles, PlayStation, Xbox.
Right. And it really seems like their focus lately has zeroed in on those data center and professional GPUs. That's where the AI conversation really heats up and probably where that valuation comes from.
Absolutely. That's the core of the growth story. Now, when we talk about their competitive advantage, their economic moat, analysts call it narrow, but importantly, they also say it's strengthening.
Okay. Narrow suggests they have advantages like IP, chip designs, but maybe not completely unbreachable.
Exactly. Think of it like a castle with a decent moat, but maybe not the widest or deepest one. Competitors can potentially catch up over time. It relies heavily on their intellectual property and innovation pace.
So if it's narrow, how is it strengthening? That seems key in such a tough industry.
Yeah, the strengthening part is crucial. It suggests they're actively digging that moat wider, maybe innovating faster or locking in key customers. For example, their EPYC server processors. They've had 33 straight quarters of year-over-year market share gains. That's almost 8 years solid growth against tough competition.
33 quarters, that's incredible.
It really is. And EPYC powers a big chunk of the world's fastest supercomputers, too. It shows they're embedding themselves in critical infrastructure, building sticky relationships, demonstrating leadership. That's how you strengthen a narrow moat.
Super impressive.
Mm.
But let's be real, they aren't alone out there. It's a cutthroat market. Who are the main competitors, especially in AI and data centers?
Yeah.
We're talking giants, right? Like
Mm-hmm.
NVIDIA, their market cap is, what do you say, $4.42 trillion?
Cillian, yeah, it's mind-boggling.
Mind-boggling. Then you've got Broadcom, TSMC, Micron, Intel, Marvell. I mean, the competition is fierce, especially against NVIDIA, who kind of owns the AI chip market right now.
Mhm.
How does AMD even compete?
It's definitely playing against a titan. NVIDIA's scale and existing dominance in AI are huge advantages. For AMD, it's about being strategic, offering strong performance, often at better prices, building an open-source software ecosystem, RCM, as an alternative to NVIDIA's closed CUDA platform, and using innovative designs like chiplets for flexibility and potential cost savings. They're trying to be nimble, maybe outmaneuver rather than just overpower.
Makes sense. Okay, that leads us nicely into their recent performance. Q2 2025 results came out August 5th. They called it very strong results. Record revenue, $7.7 billion. That's up 32% year over year, beat expectations. Plus, record free cash flow over $1 billion. Sounds good.
Yeah, on the surface, very good. Digging in, that client segment revenue, the PC stuff, hit a record $2.5 billion, up a huge 67% year over year, driven by Ryzen. And data center revenue, key for the AI story, grew 14% year over year to $3.2 billion, mostly from EPYC. But, and this is a big but, the reported gross margin, JAP, was 40%, non-GAAP 43%, was hit hard by a massive $800 million inventory write-down.
Okay, hold on. $800 million write-down, that's huge. What happened there? What caused that?
Yeah, it's a significant number. That charge was directly tied to U.S. government export controls, specifically restrictions on shipping their AMD Instinct MI308 data center GPUs, the AI chips, to China. When those restrictions said they couldn't ship the inventory they had built up, so they had to write down its value. It's a direct hit from geopolitics.
Well, so that policy directly dinged their profits.
Yeah, directly. And here's the key thing. If you pull out that one-time $800 million charge, their non-GAAP gross margin would have been around 54%. So the underlying business profitability is actually quite strong. That write-down masked it in the reported numbers.
I see. So that explains why the earnings per share might have disappointed some people.
Exactly. The diluted EPS came in at 0.54 cents, non-GAAP $0.48, which missed some estimates because of that write-down. That's why the stock slumped after earnings, even with the revenue beat. It was that good news, bad news situation. The market focused on the hit and what it means for future China sales.
Okay, understanding that write-down is definitely crucial then. So looking forward, what's the outlook? What's AMD guiding for Q3, and what are the big growth drivers they're banking on?
For Q3 2025, they're projecting revenue around $8.7 billion. That's still strong growth, 28% year over year. And they expect that non-GAAP gross margin to bounce back to 54% now that the big write-down is hopefully behind them. But here's a really interesting detail. That guidance doesn't include any revenue from those MI308 shipments to China. The licenses are still under review.
Ah, so if those licenses do get approved.
Exactly. There could be potential upside later that's not even in their current forecast. It's like a hidden potential boost, a wild card for investors.
That's a powerful point. And management's pretty bold about their long-term AI goals, right? Talking about scaling to tens of billions in annual AI revenue.
Oh yeah, they're not shy about it. Tens of billions. That implies a massive expansion, driven by this whole AI transformation across industries.
How are they planning to get there? What's the strategy?
Well, part of it is new products like the upcoming MI400 GPUs, codenamed Helios. These are designed for massive AI computing at rack scale. They're also pushing hard on their open source software, ROCm7, trying to build an alternative ecosystem to NVIDIA's CUDA. That could attract more developers. Plus, their chiplet architecture offers flexibility. And they're signing strategic partnerships like with Humane, Red Hat, KDDI, Dell, to get their tech integrated into broader enterprise solutions. It's a multi-pronged approach.
Okay, so lots of positive points, ambitious goals, but there are always risks. What are the big concerns highlighted in the analysis? Things for listeners to really weigh up.
Absolutely. Number one is those ongoing U.S. export restrictions to China. As we saw with the write-down, it's a real tangible risk that can hit the bottom line. It's not just theoretical, it's actively impacting them.
Right, a persistent headwind.
Definitely. And the other major one, as we discussed earlier, is valuation. The stock price is significantly above that fair value estimate. It suggests a lot of optimism is already priced in. Future returns might be limited unless they absolutely knock it out of the park, exceeding even these high expectations. You're paying a premium for that potential.
Which brings us right to that classic bull versus bear debate. Analysts are split. What are the main points on each side?
Well, the bulls focus on that strong AI market position, the innovative products like MI400, the open ROCm ecosystem. They point to the growing market share, especially EPYC's success, and they emphasize the underlying profitability, stripping out that one-time charge, and the strong cash flow. They see a fundamentally healthy company in a booming market.
Makes sense. And the bears.
The bears hammer on those geopolitical risks. The China export controls are a major uncertainty, a potential cap on growth in a huge market. They worry about the elevated valuation. Is there any upside left at this price? They also point to the intense competition, particularly from NVIDIA, which still dominates AI hardware. And finally, they stress that AMD's valuation relies heavily on executing flawlessly on that AI growth plan. Any slip-ups, product delays, or even just a market slowdown could really hurt the stock, given how much hope is priced in.
Yeah, and we saw headlines reflecting exactly this just recently, around August 11th, 12th. Lots of talk about China export deals, how they impact chip sales for both AMD and NVIDIA is clearly top of mind for the market. A constant back and forth.
It really is a very dynamic situation, and the different analyst takes really show that complexity and uncertainty.
Speaking of analysts, what are their price targets looking like? Seems like quite a range.
Yeah, it's pretty spread out, reflecting that bull-bear tension. You've got Deutsche Bank at $200, Morgan Stanley at $185. But then you see Wolf Research way up at $339, Goldman Sachs even higher at $345. On the other end, UBS is more cautious at $150.
That's a huge range. What's the average?
The average analyst target in the last 6 months is about $178.62. So you compare that to the current trading price, around $180, and that fair value we mentioned, near $144. It just highlights how differently experts are viewing the stock's worth right now. There's clearly no consensus on how much future growth is priced in or how big those risks really are.
So wrapping up this deep dive on AMD, it's really clear, isn't it? Understanding a company like this goes way beyond just headlines or even just revenue numbers. You've got to look at the underlying financials, the strategic chess moves they're making against competitors, and this complex web of market forces and geopolitics shaping their path. It's quite the case study.
Absolutely. I mean, this AI transformation, it's a massive opportunity for AMD, no doubt, but it also comes with significant risks. For you, the listener, it's really about carefully balancing that innovation and leadership against the price you're paying today, that valuation premium, and those external pressures, especially the regulatory and geopolitical ones. It's a constant evaluation. Hopefully this gives you a clearer lens.
That's a great thought to end on. Thanks so much for joining us for this deep dive into advanced micro devices. If you found this valuable, please do remember to subscribe to our channel and hit that bell icon. It helps you stay informed and really supports the deep dive.